Billionaire investor David Shaw just keeps buying these three stocks that have a massive potential for upside. Let's get into what these stocks are and understand why a billionaire would want to invest in them. So stay tuned. So as we all know, the market in general is going up a lot right now, and it seems like the current political climate is favorable for healthcare investment. It seems to be quite unlikely that we will see tax increases and further regulations on drug price in the near future, and so these kinds of pharmaceutical stocks have some great upside potential. We even saw Goldman Sachs strategist David Kostin agreeing with this and changing his rating for the entire healthcare sector all the way from a sell to a buy. He says that this is still priced at bargain levels and that healthcare is the best opportunity from a value perspective. They are the cheapest they've ever been, so that's an area of focus. But there are so many different stocks out there in this sector, so to find which stocks are the winners, we could look at what a billionaire investor is buying right now. And this is where billionaire investor David Shaw comes in, who is widely known for his impressive stock picking abilities and has managed to grow his hedge fund to $82 billion. But despite this success, he's still very much involved in higher level strategic decisions. So let's look at what three healthcare stocks David Shaw just keeps on buying. First up is Vertex Pharmaceuticals, a Boston-based company that got its start creating medications for patients with cystic fibrosis, an usually fatal genetic lung disease. Vertex currently has 4 approved cystic fibrosis treatments on the market, along with an active research pipeline for focusing on drugs to treat rare genetic disorders. Vertex's strategy is to develop medications that will treat or ameliorate the underlying genetic mutation of such diseases rather than suppressing the symptoms. The company has treatments under development for a varied range of conditions, including sickle cell disease, beta thalassemia, and a muscular dystrophy disease. The company had a strong financial performance in Q3, generating $1.54 billion, up 62% year over year, and the earnings per share came in at $2.64, beating the forecast by 10.5%. Now, in October, Vertex did announce that they would stop their phase 2 study of a certain drug, which is their prime drug in the researching pipeline. Obviously quite bad news, which led to the share price going down 20% and still not recovering. And these things make an interesting background to Shaw's recent purchases. The fund bought 203,308 shares of Vertex, or ticker symbol VRTX by the way, in Q3, which at current prices is worth around $46.8 million. It is also important to remember though that Shaw made these purchases before the news about the discontinuation of the trials broke. But even Piper Sandler's 5-star analyst Edward Tenthoff thinks that sure, discontinuation was disappointing, but that the sell-off in VRTX shares was overdone. Also, they're working on a bunch of other studies that are showing to be very promising, and they expect to find the results very soon in 2021. The analyst Tenthoff rates Vertex as a buy and sets a $307 price target that implies a 33% upside potential for the next 12 months. And guys, Wall Street seems to agree with this sentiment. Vertex shares have a strong buy analyst consensus rating based on 14 buys and only 4 holds. The stock's $287.5 average price target suggests that it has room to grow 24% in the year ahead. This kind of consensus is quite rare, and it makes me agree that this stock might indeed be undervalued and be a great opportunity for buying right now. And the next stock that billionaire David Shaw keeps buying is Cigna Corporation, ticker symbol CI, and is one of the biggest names in the healthcare insurance industry. These guys provide a range of medical, dental, disability, and other related insurance products, and they are a major provider of both Medicare and Medicaid plans with a crazy revenue of over $153 billion for a calendar year of 2019. The company is on track this year to exceed these revenues. In Q1, the top line came in at $38 billion, and revenues have grown since then. For the third quarter, the result came in at $41 billion, while the earnings per share came in at $4.41. The earnings per share has come in above expectations for 7 quarters in a row. The results show the quality of a major medical insurer at a time of global health crisis. And as you know, guys, David Shaw is a huge fan. 782,737 shares were bought by his fund in Q3, with the total position now landing at 800,000 shares, right now owning around $168 million in this stock. Again, another analyst, this time George Hill from Deutsche Bank, is also impressed by what he sees. Of the company's current position, he writes, Cigna saw a quarterly uptick in medical utilization, a trend the company believes will persist into the back half of the year and onto 2021. We continue to see Cigna as one of the most attractive growth stories in this healthcare space, trading at a compelling valuation, though we can see that investor pessimism regarding the commercial insurance space could prevent the share's multiple from expanding in the near to medium term, the analyst concluded. George Hill rates CI shares as a buy with a $208 price target that indicates a confidence in a 34% upside growth for 2021. Again, some great potential. And again, overall, the 14 recent reviews on Cigna break down to 13 buys and 1 hold, making the analyst consensus rating a very strong buy. The stock is selling right now for $204, and even looking at the $255 average price target, that would still suggest a 25% upside, which is really good for a company of this size. And guys, last but not least, we have Syneos Health, ticker symbol SYNH, a contract research organization that bills itself as offering biopharmaceutical solutions. Syneos services include bioanalytics, clinical development, commercialization, diagnostics, and medical devices. That company serves a global customer base, helping research companies conduct late-stage clinical trials, and also offers a multidimensional expertise that focused biopharmaceutical companies won't necessarily have. And guys, the value of the niche can be seen from the revenues and the earnings. Syneos regularly tops $1 billion in revenue per quarter. The recent Q3 result was a $1.1 billion, for example. Earnings per share has been climbing since the first quarter when the crisis hit this economy, and the third quarter earnings at 93 cents per share beat the forecast by a staggering 17%. The year-over-year EPS growth was stronger at 20%. David Shaw is clearly impressed by SYNH, enough to buy an additional 164,000 shares, nearly doubling his holding in this stock, and currently having an ownership in the stock of around $21.9 million. And this time, JP Morgan's 5-star analyst Tycho Peterson said that we expect this company to outgrow industry peers, aided by a diversified global footprint and therapeutic expertise in high growth segments within clinical development, including CNS, oncology, and complex diseases over the next several years. As such, we see room for upside from current levels as SYNH continues to generate revenue and earnings growth above industry averages. Peterson backs his comment up with a buy rating and an $85 price target, suggesting an upside of 30% over the next year. And once again, it seems like stocks that billionaire David Shaw likes are also loved by Wall Street. Syneos got a strong buy rating from the analyst consensus, supported by 6 buys and 1 hold. And even the average price target suggests a nice 20% upside potential. So guys, all in all, I will definitely consider getting into some of these stocks, and I always love to look at very successful investors when I want inspiration to find good stocks. As always though, make sure to do your own research and make your own decisions when going out and investing your own money into the stock market. I'm not a financial advisor, and this is not financial advice. And that concludes today's video. As always, if you enjoyed the video, giving it a like would help me out more than you can imagine. It would help the video reach out to more people and, grow my channel. And if you watched all the way to this point and you're not subscribed to this channel, but want to stay around for more updates on various different growth stocks and interesting stocks that I like to talk about, then why not subscribe? yeah, I appreciate all your support and thank you for watching. Enjoy the rest of your day.